Maithili is going to be talking to us possibly about the IIP and what it means. So India's industrial production, that is, has shrunk by a record 55.5% in April. This is from last year. Now the manufacturing at the same time has crashed 64.3% as computed from data released by the government. Now this didn't provide a number for the change from April because of the COVID-19 lockdown. So the highlights here are pretty much that IIP has shrunk, retail inflation data for May has been withheld, food inflation in May stands at around 9.28%, and they expect uneven demand and supply recovery as well. But Maithili is going to be bringing more on that side, more on this topic, I think. So let's go over to her.
The Reserve Bank of India's decision to set up an internal working group to look into the issue of ownership and control in private sector banks is a very welcome, long overdue decision, because though the present guidelines go back to 2005 and the broad contours have remained unchanged in the sense that the RBI always wanted diversified shareholding, it also wanted to be sure that the promoter was somebody who was fit and proper. So these broad contours have remained unchanged. The fact is that there have been issues in the recent past, particularly with Kotak Mahindra's promoters taking the RBI to court over the issue of RBI's mandate that they should reduce the promoter shareholding. We also saw the issue with Bandhan Bank. Recently, IndusInd promoters have sought to hike the promoter shareholding. And the fact is that there was no harmony in the various regulations of the Reserve Bank of India, because even though these licenses now are available on tap, over a period of time, the RBI has kept revising its guidelines in the matter. So it is good that the RBI has set up a committee to go into the broad issues of harmonizing all the guidelines. The committee will also look into a very important aspect of whether banks should come under the suggestion that was made earlier by the Anand Sinha committee of the NOFHC, that is a non-operative financial holding company, under which banks will not have subsidiaries of their own. They would all be subsidiaries of the NOFHC, so that in case there is any problem with a subsidiary, like in the case of a mutual fund, this will not impact the balance sheet of the bank. So this is again a very important term of reference for the committee. Hopefully we'll get a report soon and the RBI will be able to move forward so that all the dissonance that we have seen in the matter of promoter shareholding is settled once and for all. And we also have a very firm decision and a roadmap on operationalizing the NOFHC.
You'll have to excuse this this sound in the background right now, excuse me. American technology firms such as Google and Apple are likely to bear the brunt of a potential ban on H-1B work permits by the Trump administration. Let's bring on Chandra for more details.
Software lobby NASSCOM has reacted to reports emerging from the US that the Trump government is going to ban a number of employment visas, and this of course includes the H-1B visa, which is hugely popular with people from India, especially in the IT and software services space. Now, we spoke to software lobby NASSCOM. They said that they expect a proclamation on visa ban to happen in the next couple of weeks. This has been going on for a while now. They have raised it with various authorities in India and the US, and they hope that the ban will not last beyond September, because October is when the new visas are issued, the new H-1B approvals come through. So that will get impacted in a big way. Meanwhile, there could be some impact on people who have H-1B visas, who have returned to India during the pandemic and now want to go back. So that may not happen. But overall, if you look at it, IT unemployment in the US has been declining in the last few months. It's less than 3%. So it looks like Trump is going after the wrong sector. More importantly, if you look at the H-1B workforce, they account for 0.05% of the total workforce in the US. So, whether this will have a meaningful impact on employment in the US is something that we have to wait and see. But if you look at the broader trend, the top 7 IT companies in India have been applying for fewer and fewer visas over the years because they are focusing on local hiring, on more offshoring, now remote working. So the impact might be lower than what people expect.
All right, thanks for that, Chandra. We're also going to bring on Karunya now, because Eicher Motors reported the Q4 revenue and profit numbers yesterday, and it was pretty much in line with analyst expectations. Profits came in at 304 crore versus 544 crore last year for the same period. Meanwhile, your revenues from operations fell to 2,200 versus 2,500. The margins also contracted sharply to 19.6% against 27.3%. Let's bring on Karunya for more.
Well, Eicher Motors' Q4 performance has largely been in line with what we were expecting. Revenue and profit both have come in bang in line with our expectations. But what has disappointed us a tad bit is the margins performance, because it has breached the 20% levels also on the downside, coming in at 19.6%. And for an Eicher, who is typically used to delivering a performance in the excess of 29-30%, coming down to a 19.5% level is definitely quite upsetting and quite distressing. Production and sales, according to the management, have been impacted because of suspension of operations and supply constraints in Q4. They're saying that bookings are now back to pre-COVID levels, especially for Royal Enfield, because VECV continues to be fairly weak given the whole down cycle phase that the CV space has entered. Business activity also, they're saying it's back to normalcy. Customer walk-ins, however, are still pretty weak. So they are optimistic about the healthy bookings, but about the sustainability of these demands and customers walking into the stores, they are not very certain about that at the moment. Digital engagement, however, the management said is an all-time high. They are optimistic in the face of challenges. They're optimistic that they will beat this, and there are better days ahead of Eicher Motors. They have an extremely strong balance sheet, cash position despite the enormous uncertainty, and that's something they've been betting on. They're not holding back on any important investments. There are no capex revisions or cuts at this point in time. They're not even laying off any employees. So yes, they have a good cash position, but they said the investments are going to be merit based, and most of their core capex on infrastructure, etc., is behind, and what they are now going to be investing in largely is on the product development side.
As the markets open up in international markets, I think the faster growing markets are LATAM and APAC for us, but there are also steady markets like North America and Europe, which have been doing well, and we have established ourselves. They will continue to do well. We also have new products coming along the way later, so which will help us give us in these markets. As far as reduction in employees or layoffs, we have no such plans, and we're not doing cost cutting like that. I hope that we don't reach anything like that. God forbid that such a situation.
All right, that was an update on Eicher. Now we're also going to discuss M&M's Q4 numbers, which were out yesterday. Everyone's surprise were beat because the margins surprised actually, and the stock rallied over 7% in trade on the back of these numbers. The revenue was 9,000 versus 13,800, so that's quite a decline. Your loss was at 3,200 versus profit of 969. Your vehicle sales were down 47%, but your reported operating margin was 13.6 versus 13.5. So at the operating level, things were much better. There was an exceptional expense of 3,577 crore, which is why the profits were looking optically lower. So that is the M&M update. I think we're now going to also look at the Ambani stake sale. And it seems that billionaire Mukesh Ambani has increased his stake in Reliance Industries to a 12-year high of 49.14%. After the conclusion of the firm's mega rights issue recently, Ambani and other members of the promoter family committed to invest 28,286 crore and subscribe to 225 million shares in the 53,000 crore issue. So Ajay, who follows the story very closely, is here with us. Good morning, Ajay. Welcome to the show. Take it away.
Good morning, Varun. So now what is happening is that what everybody is taking notice of is this. Mukesh Ambani is putting 30,000 crore of his family money into the company. So this is a very big endorsement, one of the biggest endorsements you've seen, that when the family is putting their own money and raising stake, at a time when everybody is also taking, in fact, is awestruck that these 10 biggest investors, best of the minds, global minds in investing, General Atlantic and everybody else, Facebook, etc., putting money. So people are raising concerns that how are the valuations looking? And now at 12 in the rights issue at 12.57 rupees a piece, the promoters themselves are also putting money. Historically, Reliance has traded at 12, 13 times 1 year forward kind of multiples because it was a oil major. Now it is becoming a technology company. So the multiple is expanding, earnings are likely to increase, and big money is pouring in, both from the investors as well as the company. So there's a very big re-rating which is actually happening. And of course the family stake into the company is going up. So there's one of the biggest case studies actually, if you look at it that way. Promoters are bullish on the company at this stage, are putting own money. Best of the investing minds are putting their own money, and the company is changing its business model from an oil major to a technology major. So everybody's taking notice of that right now.
All right, great. Thank you, Ajay, for bringing us the latest on that. And it's so exciting what's happening at Reliance, and the stock is just going in one direction no matter what the market does. So thank you for bringing us the latest on that. Let's now bring on board Vinny as well, as Future Retail is in talks with a consortium of investors led by Premji Invest to sell a stake in the retail chain, even as it is continuing parallel discussions with Reliance Retail. So not just one party, there seems to be multiple parties interested. Amazon and Samara Capital are also rumored to be eyeing this stake. So this is because of all the debt problems in the company, but Vinny is going to walk us through it in detail now. So over to you, Vinny.
Future Group's debt is no new news, and as on last September, their total debt was around 12,778 crores. So, now Kishore Biyani's flagship retail arm, that's Future Retail, is looking to sell its stake, and as of now, they were already in talks with Reliance Retail, Amazon and Samara Capital, is what we have understood, because they were weighed down by the debt. But today, the new news is that even Premji Invest is looking to buy its stake in the company along with a consortium of investors. As of now, Premji Invest already owns around 6% stake in the company, and Amazon also already owns 3.2% stake in the company. So, with they are planning to increase their stake further, and maybe they will, with a group of investors, try to get the company out of its liquidity crisis and buy more stake in the company. So that will be interesting to see what actually pans out for Future Retail. And as of now, Future Retail, 42% of the company was owned by Kishore Biyani through future coupons, but out of that, 75% of that stake was actually already pledged to the lenders. So the shareholding was pledged to the lenders. So that is something we should keep an eye out for. And they were in a very huge debt. So that is why they are looking to sell their stake. And let's see actually how this pans out, whether Reliance Retail, Amazon, or who does the deal actually go along with. And we'll keep a close eye on this.
All right, thank you for that, Vinny. Let's now take it forward to an important story. The Supreme Court has basically asked the RBI and the banks to consider an interest waiver for the loans that are under moratorium. And the argument is that basically if you're giving people moratorium, they're anyways in trouble. Now why should you charge them so much extra interest? If you have loans which are long, 20-year, 30-year loans, then these moratorium additional interest is so high in some cases that it means that you're significantly increasing the cost. So basically what RBI or the Supreme Court is asking the regulator to do is explore an opportunity to maybe waive this interest. Then you have banks coming in saying that if they do that, around 2 lakh crores of capital can be lost because 40 lakh crore loans are under moratorium. So it's a tricky situation. The hearing was adjourned yesterday and pushed forward. So we'll be bringing you more on it as and when it develops. Let's take it forward now. Hindalco also came out with its numbers yesterday. So the numbers were okay. The 43.29% year-on-year fall in net profit was a bit concerning. Obviously, the revenue has also declined in these times around 13.11% to just under 30,000 crore. But the management seems pretty optimistic and expects a U-shaped recovery, and they expect this to be fueled by electrical goods, pharma and construction. So it'll be a key counter to look out for. It should be fairly active in trade going forward. Okay, another important story for this morning is also that on GST relief. The Finance Minister Nirmala Sitharaman has announced various measures to encourage tax compliance for those without tax liabilities, but those who have not filed their returns. There will be no or zero late fees. The Finance Minister also said that there will be a separate meeting next month to discuss the issue of compensation cess to be given to the states. So we all know this is a pretty sensitive subject, and we'll look out for how it concludes. If you'd like to read up more, it's on page 7 of this morning's Economic Times. Okay, let's now quickly get you the top 5 from the Times of India. You have the fact that cases in India have crossed 3 lakh and 11,775 single-day spikes. So that's the largest cases we've seen. Maharashtra has crossed 1 lakh cases in the last 96 days. The doubling time of cases has slowed down to 17.4 days. Delhi adds cases twice as fast as Mumbai now. That's something that's really a recent trend. No night curbs on highways for buses or trucks. So, transportation, I see, is going to get some easing. So that's pretty much everything we seem to have lined up for you this morning.